Hello and welcome to Moneycontrol's live stream. You're tuned into a closing bell with me, Lavisha Darad, and joining me, my colleague Yatin Mota. Well, Yatin, there was some sense of relief rally that we did see in the markets today. We have defied a weak global handover and settled confidently in the green. Sensex is up about 550 points, and Nifty is also above that 23,300 levels. So good participation that came in from the broader end of the markets also. Both the mid-cap and small-cap indices are up 1% each. Sectorally too, it was green across the board. Nifty, IT, bank, realty, all of these indices which were bogged down in yesterday's trading session saw a smart recovery in today's session too. Yatin, the headline continues to be the Trump's tariff plans and what he calls it as a liberation day. And given Trump's like-for-like stance, the severity of the tariffs is something that we need to watch out for.
Yes, definitely the severity of the tariffs and the Trump tantrums or the tariff tantrums needs to be watched. Now, the key point today's trading session taught us was the kind of closing we saw for most impacted stocks on the tariff, be it Tixon Technologies, be it textile names, be it gems and jewelry companies. Most of the players closed at the day's high. In fact, you look at the Nifty 200 points plus, the mid cap index almost 1.5% higher. And the market breadth has improved significantly from yesterday, which was almost 1:1 to 3:1. So clearly, the markets doesn't seem to be really very worried with the Trump's tariffs, especially countries like India, which have a very small exposure. And with tariffs, things don't change much with respect to India and the export basket. Let's see how really does the things shape up. As you know, Trump today will announce his tariff details by 1:30 a.m. India time. So let's hope the tariff gets diluted. Trump is not as harsh as what he has spoken so far on the entire tariff issue.
That's right. Now let's look at some of the top Nifty gainers and losers at this point of time. Tata Consumer Products, 7% uptick. Goldman Sachs upgrade has brought a cheer in the sentiment of the stock too. Zomato, 5% uptick. We had the Goldman Sachs buying stakes. So, of course, we're seeing some good cheer on Zomato stock too. Titan resuming its uptrend after 2-day loss of 3.7% uptick. IndusInd Bank, 2.8% uptick, rising 7% in 2 days itself. On the other hand, if we look at the losers pack, BEL, top Nifty laggard at this point of time, it missed the FI25 order guidance. We'll be talking about the stock more in detail too. Ultratech Cement seeing a cut of about 1.1%. Nestle also seeing a cut of about 1%. BofA downgraded the stock to underperform. So that is why we're seeing a little bit of an underperformance there too. Power Grid, L&T, both of them seeing a cut of about 0.5 to 0.8%. So yes, that was the case from the large cap space. Yatin, why don't you take us through some of the shakers and movers from the broader end of the markets?
Yeah, the broader end of the market saw some good buying in trade today, Lavisha. In fact, the Kalyan Jewellers, top F&O gainer, 12% higher for that stock. Lodha Developers, Godrej Properties. The real estate stocks which were down yesterday after Maharashtra increased the ready reckoner rates. Today we saw exact reverse, almost 5% higher for top two Mumbai real estate companies, that is Lodha and as well as Godrej Properties. What was not doing well is Bharat Electronics. After a week, update for FY25, Bharat Electronics shares fell almost 3% yesterday. Today also a 5% intraday dip, settled at almost 3% lower. M&M Finance, RBL Bank, ahead of the quarterly update, both stocks were under pressure, as well as Crompton and ABB, the engineering stroke capital good companies were also down and about in trade. But overall, quite satisfactory day of trade when it comes to the mid cap end of the market.
That's right. Now, moving on, let's break down some of the stocks that were in focus today. First up is Tata Consumer. It was one of the top Nifty gainer also after Goldman Sachs upgraded its rating and raised its target price on the stock by over 15%. Now, the brokerage has a buy rating on the stock from its earlier neutral rating, and they have revised the target price to 1,200 rupees per share. Now, why the bullish sentiment from Goldman Sachs? Analysts expect the company to report a strong EPS growth over FY25 to 27. 2027. Basically, if we look at the previous third quarter results, then the company did report a flattish net profit growth, and even EBITDA was reported quite flat. So this muted Q3 performance came in due to rising cost of tea, and since it contributes nearly, more than half of its overall revenue, so the company did face some pressure over there. Later on, the company did implement 10% price hikes on tea and salt. So Goldman Sachs expects that tea margins will be recovering from this quarter onwards, and they expect that to see the worst to be behind. Apart from Goldman, other brokerages such as Nomura also reiterated its buy call on the counter. Meanwhile, CLSA has maintained a hold rating. Yet then Q3 did see some inflationary concerns, and now with companies implementing pricing intervention, brokerages have started turning quite warm towards such counters, and the street seems to enjoy it.
Yes, and yes, in fact, BofA had downgraded Nestle as
Hmm.
well as HUL. Clearly,
Hmm.
today's Goldman Sachs upgrade report on Godrej Consumer did the trick. In fact, the FMCG index also got a buoy up with the kind of performance that we saw for Tata Consumer Products. 1200 is the target, even from the current market price of 15% upside. On your screen, 7% higher in trade today.
That's right. Now let's talk, since we touched upon the top Nifty gainer, let's touch upon the top Nifty loser also. Bharat Electronics, that was the top Nifty loser, and after the company did miss its order inflow guidance for FY25. The company has said that it has received orders which is worth about 18,000 crore rupees during FY25, which is lower than what it estimated. That was your 25,000 crore rupees. But if you look at other criteria, for instance, its revenue growth for the FY25, that was higher than what the company had anticipated. The company also reported 16% increase in overall turnover in FY25 compared to FY24. The sales figures also for the year saw about 14% growth for BEL. Yet then, despite the order guidance miss, plenty of brokerages are bullish on the counter, and defense theme is expected to gain the order book in the next couple of months.
Yes, and I think in the April first week we had the Cabinet Committee for Security, which gave more orders, in favor of
Yes.
HL as well as BEL. So it is
Hmm.
not that orders are short. In fact, a few orders probably will get doled out in a few days once the paperwork is done. Nothing really disappointing, but the new orders came with a lag, with Q4 slightly lower than what the street was anticipating in terms of growth. We saw the stock clearly taking hit yesterday also and today also, a gap down in the counter of BEL.
That's right. Now let's take focus of three state-run lenders. We saw Central Bank of India, Punjab and Sindh Bank, and Indian Overseas Bank that were in focus today. All of them did experience significant declines after a recent fundraising round, which was done by a QIP. Central Bank shares were down for the third straight day. Punjab and Sindh Bank extended its loss to the second straight day, and even Indian Overseas Bank shares fell about for the sixth straight day. Now, the last QIP fundraise was by Indian Overseas Bank, which raised about 14,036 crore rupees. And interestingly, 25% of total capital raised through this process across all the three banks came from LIC. Punjab and Sindh Bank also issued its shares to Central Bank and Indian Overseas Bank, and even Central Bank issued shares to PNB and Canara Bank and Bank of Baroda. So both the banks allocated shares to other PSU firms too as a part of this fundraising initiative. Now, why the fundraising was done? Basically, it was done to reduce the government's ownership in these stakes. Currently, government's stake in all of these banks remain above 90%, and MPS norms mandate at least 25% equity shares to be held with the public shareholders. Yet then, not surprisingly, the increase in flow diluted the share price, and now all of them are trading below their issue prices of QIPs.
Yes. Yes, and 2 3 things here, Lavisha. Number one is that nearly 25% plus issue size was subscribed by LIC, which
Hmm.
indicates that the institutional participation was lagging, because
Hmm.
typically market sees LIC as a bailout for the public sector issuances when it comes to all of these QIPs. Additionally, all of these stocks that you mentioned in the PSU bank basket are now nearly 10% lower than the QIP price. So clearly, a few of these funds who would have subscribed to the QIP are coming into the market and probably monetizing that stake. But let's see how these banks really perform, because the deposit growth probably for these banks is expected to pick up in the coming quarters. But moving from PSU banks to the metal space, which is Hindalco. Citi today has a buy call with a target of 725 on Hindalco, and Hindalco to the analyst had intimated the new growth plans. Now the Novelis capex remains almost unchanged. The domestic capex is upwards of $5 billion in the coming years. Most importantly, Novelis aims for a 75% recycled content by 2030, almost higher by nearly 12 percentage points to the current levels. In fact, the target for Novelis EBITDA per ton remains at $600. We had the street which was slightly concerned because Novelis hasn't been able to deliver EBITDA margins in excess of $600 per ton. So 600 is still a tall target which the company hopes to meet in the coming financial years. Also, the India EBITDA per ton is expected to increase once a lot of these premium products are rolled out. A lot of changes are happening in what Hindalco has to offer its customers, especially in the copper and the aluminum segment. So the analyst meet was satisfactory, post which we saw some buying in the stock, but overall brokerages remain positive when it comes to the stock of Hindalco.
That's right. All right. With that, we've come to an end of this edition of the Closing Bell. Tonight, we will be watching out the contours of what the tariff plans it is and how the markets react to it tomorrow too. But until then, it's a wrap from Yatin and me. Stay tuned to moneycontrol.com.